How I stopped losing money on TradingView. Hi everyone, my name is Raji, and today I will be taking you through TradingView and all the indicators that you need to upload on your chart in order to maximize the benefit of using TradingView and in order to increase your chances of winning. Once again, I am quite well known for being able to predict prices or the price movement to the exact dollar figure. For instance, yesterday in my last video about gold, I predicted that gold will drop to 4,400 before it actually makes the next move. And that is exactly what it did. You can see it right here. It dropped to 4402. So, and I will teach you in this video how to be able to do that. So bear in with me and listen till the end, as I will be including many indicators on this chart, and not many. There will be literally 7 indicators that you will have to take note of, and then you will be able to evaluate and assess the price movement for any chart out there. Of course, it's going to take practice. It's going to take you making mistakes and learning from those mistakes. But what I will be doing is empowering you with the tools that will enable you to make the best possible predictions using TradingView. And if you don't have a subscription within TradingView, I've included in my profile under this video in the description literally a link that you can use in order to make a subscription with TradingView and receive $15 credit. I believe that's what they're giving as a promotion when you're using my code. Okay, so the moment you get into TradingView, this is literally what you're going to see when you move into the full chart mode. So this, for instance, is the chart for gold spot, which is XAU USD. The very first indicator that you need to put on the chart, the first 2 indicators, are actually the moving average lines, the simple moving average lines. And you need 3 of them. So I lied, it wasn't 2. So you look for simple moving average lines and you click on them 3 times. 1, 2, 3. Okay? And once you do that, you now need to literally configure each one of these moving average lines. So you hover over the SMA 9 close, you click on settings, and you change that to 200. We will create one with 200 length, one with 50 length, and one with 5 length. So this is the 200, and let's just choose a color, and we'll take red, for instance, and then you press OK. And you notice that there is a line right now for the 200-hour moving average line. Now we need to do the same thing for this, and we configure it to 50 time period. And let's change the color to green. And there you go. Now you have 50 and you have 200. And the last but not least is the 5 period. And let's give this another color, blue. Okay? So now we have the 5-hour moving average line, which is close to the price action. And then you have the 50-hour moving average line, which is the green line, and then you have the 200-hour moving average line. Now, we want to understand how much volume is happening in every price movement, so we add another indicator called volume. And right there, you can see a new ticker, and this addition to the chart has now occurred. So it's actually indicating how much trading is happening in terms of buys and sells for each volume. Now, this is great. However, we need more help. So how do we get that more help? There are three things that we will add to the chart. The first thing is what we call stochastic RSI. So let's add them, and then I'll explain to you how each is actually going to work. Stochastic RSI, right there. Okay. So we've added a stochastic RSI, and then the next thing we want to add is the MACD, which is what we refer to as moving average convergence divergence. So you click on that, and you have MACD right here. And last but not least, you want to add the TTM squeeze, which is right there. And now we have these three new indicators. Now, let's analyze the chart even further right now. So there are several terminology that you need to be aware of, and I would have to actually do separate sessions on each. But for instance, when a 50-hour moving average line actually crosses over or below the 200-hour moving average line, that's actually a bearish indication. When it's moving upwards, that's actually a golden cross. When it's heading down or moving downwards, it's called a death cross, and that's something that you need to just keep note of accordingly. However, in this case, it's actually turning around, so it might move upwards once again, but that's not the intention of this video right here. Now, if we look at the stochastic RSI, we want to make sure that we're analyzing it correctly. So when the stochastic RSI, which is the blue line, and the orange line is, we call it the signal. So when the blue line is overtaking the orange line and moving upwards, then it's moving towards the overbought zone. Okay. And whenever it's actually moving upwards, then the price has a chance to move upwards as well. But when it's dropping down, then the price will most likely start decreasing as well. Having said that, you need to do the analysis not depending only on one indicator. You have to try to read these three indicators together to maximize your success. Okay, so for MACD, for instance, when you start seeing dark green rectangles, that's a good indication that the price is actually going to start moving upwards, or it's reversing in order to start moving upwards. And the price will continue to move upwards when you have increasing size of green rectangles, just like right here. And you'll notice here an increase in the price. But once you start hitting lighter rectangles, that means it's going to start decreasing a little bit. It doesn't mean that it's actually going to start decreasing completely, because if it's going to decrease completely, you'll start seeing the red, dark red rectangles, which is exactly what's happening right here. It's continuously decreasing, and you'll see the light rectangles, light purple rectangles, then those are an indication that it will attempt to recover. You always want to look for a sign where the dark green rectangles are starting to take shape and increase in size, or moving from light pinkish to dark green, in order which is an indication that the price movement is going to increase, just like you see right here. The TTM squeeze is another indicator that literally tells you that a price is about to surge either upwards or downwards. So in this case, you'll notice that the TTM squeeze is showing on this indicator, which means that there is an expected increase in price. Now, just looking at this, I could tell you that the TTM is going to squeeze upwards. However, if you wish to validate that, then you need to add two additional indicators, which are the exponential moving average 8 and exponential moving average 21. And if the 8 is overtaking the 21 and the price is above the 8, then you know that the price that the price movement is going to be upwards, so it will squeeze upwards. However, if the price is below EMA 8 and EMA 8 is below EMA 21, then that means that the price is going to squeeze downwards. And why do we call it a squeeze? Because it's actually a sharp increase in the movement of the price. Now, those are literally what you need in order to make you successful on TradingView. Having said that, you don't only look at the hourly indicator. And actually, let me backtrack a little bit. You could only look at the hourly indicator or the minute, 30 minutes, 15 minutes indicator if you are a day trader. And a day trader is someone who actually wants to buy a stock or an asset and get rid of it the very same day. A swing trader is someone that actually buys a stock or an asset and keeps it for a day or 2 or 3 or 4. Okay, so their intention is not to actually just sell, buy and sell the stock on the same day, or sell and rebuy the stock on the same day if you're doing a short. No, your intention is to actually do it for about 3 to 4 days or a week max. Now, if you're a long-term trader, then you want to look at longer um, time frames, like weekly, for instance, or monthly, because a weekly and a monthly time frame is actually um, every single wick. It represents, in this case, a week, and this is another week, and this is another week. So it gives you an indication of the price movement over the next week or so. This one is quite interesting right here. Gold is showing, for instance, a hammer right here. And if the week closes at a hammer, that's a good indication that there's a reversal in the price movement. So this is an overview of what you need to have on TradingView. Once again, TradingView is a great tool when it comes to analyzing price movement and being able to make the right decisions when it comes to trading. Please take the time to learn it and use it prudently. Do not let your emotions or hopes interfere with your trading. Just look at the chart and read it as it is. It takes time, it takes practice, and I am more than happy to actually provide further lessons that will empower you to be an excellent trader. Um, just let me know in the comments what is it that interests you most, or what is it that you're looking to increase your expertise on, and I'll be happy to actually cover it. However, just to reiterate or to summarize, the 200-hour moving average, or the 200 period moving average line, in this case it's 200 weeks. You want the 50 period moving average line to be on your chart, the 5 period moving average line to be on your chart, the volume to give you a perspective on how much is being traded in terms of buys and sells. If there's more buys than sells, then it will show as a green bar. If there are more sells than buys, then it will show as a red bar. You want a stochastic RSI. You want a moving average convergence divergence, MACD, and you want a TTM squeeze. Those three um, those three indicators, along with these four, will help you assess a chart better. And if you've been following me for quite some time, you'll know that I also have something that I call Big Brother theory, which literally means that the upper time frames dictate what would happen on the lower time frames, meaning that a daily chart has more power over the hourly chart. and the weekly chart has more power over the daily, and the monthly has more power on the weekly. I'm more than happy to cover this in a separate video, but for now, I think as basics, make sure that you go out there and add these indicators on your chart and let me know if you have any problems adding any of these indicators, or if you're interested in deep diving into any of them in order to explain to you how they're supposed to work. Once again, my name is Raji. I do technical analysis from an educational perspective, and I do add my technical analysis to um, various assets and various tickers out there. So if you're interested also for me to analyze any of the stocks out there or assets that you have in mind, please drop them in the comment and let me know. Once again, this is not a financial advice. This is for educational purposes. And if you like this video, please give me a thumbs up and subscribe to the channel for more videos that I will cover in the future. Have a great day, and I'll speak to you soon. Take care.